Hello everyone, and welcome to this presentation on new and advanced ways to trade with Bollinger Bands. Welcome, my name is Stephen Primo. I am the president and founder of Specialist Trading. Thank you so much for taking time out of your afternoon to join me today. This promises to be a great presentation because I'm actually going to give you all the rules, the basic foundation to a very good trading strategy, entry rules, stop placement, and exit. And I'm going to show you how to apply it using this advanced ways with the Bollinger Bands. Now, for those of you who are unfamiliar with our website, Specialist Trading, we are first and foremost an educational site. I know a lot of websites like to promise you the world by giving you the best system in the world or telling you what signals to trade on a nightly basis. Well, we don't believe in that philosophy. We believe that the reason why the majority of most traders fail is because they don't have sound fundamental education behind them. And so I've been trading for 38 years. I started my career on the floor of the Pacific Stock Exchange, where I was on the floor for a total of 16 years, and 9 of them I was a specialist for Donaldson, Lufkin, and Genret. I traded through the crash of 1987 and the great bull market that followed after that, so I've seen and traded just about everything. I know what works with a certain amount of consistency, and I know what trading techniques don't work. So what I do with Specialist Trading is I mentor and teach all of my students all of the tips, techniques, and strategies that I've accumulated and that I continue to apply in my daily trading, and then teach traders how to use them, because these techniques and trading styles have sustained me for, as I said, 38 years. Hopefully we can shorten your learning curve so that you can be trading 10, 20, 30 years down the road. Now, before we begin, we are required to show you our disclaimer, so please take a moment to view it. I'm going to show you a lot of performance results. I'm going to give you all the rules to this particular strategy. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. So as you're taking a moment to view our disclaimer, I just also would like to make a few other announcements. Firstly, I would like to invite each and every one of you to follow us on Twitter. I post some great signals that some of our strategies have generated. I also post a lot of things such as daily financial wisdom, different things to help elevate your trading. So if you go there on a daily basis, you see a lot of great free information. Anything from positions in stocks, forex, to even E-mini futures. And then most importantly, I would like to actually invite each and every one of you to attend what we feel is going to be the trading event of the year. This is a 2-day boot camp that is being sponsored by Trading Winds. It's going to be just in about 3 or 4 weeks from now in Las Vegas on the weekend of May 11th and 12th. What's going to be is a 2-day boot camp of many, 7, I believe, different trading experts and speakers talking about anything from stocks, options, futures, forex, and taxes. I've been asked to speak as well. I will be speaking about the futures markets. And the best thing about this, as I stated, it's going to be in Las Vegas at the MGM Grand Hotel. We have been given some discounted tickets up to 75% off the price. So if you're really interested in joining us out there, I would love to meet you. I'd love to have a drink or two with you and just talk about the markets and different ideas. There is the link right there you see at the bottom. You can copy that down and paste that onto your browser. And remember, you can contact us to get that 75% discount. So I'd love to see you out there May 11th and 12th at the MGM Grand Hotel in Las Vegas. All right, so as I stated, we are first and foremost an educational company. We're all about teaching our students how to trade, because what we really feel is that the majority of students are really relying on an outside source to tell them what to do. You either have purchased a program or a technique or a system, and you've thrown away everything just to follow whatever signals it generates, and most of you are probably unsatisfied with the results. The reason is because you've taken yourself out of the game. This is what we feel. And this is what most traders do. I know I did this in the beginning of my career. My mentors taught me that you have to become a part of the process, learn some basic standard techniques and methods that have a level of consistency to them, and just become a part of the process and trade them rather than listening to either news reports or certain indicators to tell you what to do. Okay, so once again, we are an educational company, so I'm going to conduct this presentation just as if it were a class, and here's what you're going to learn today. We're first going to start out by going over the common uses of Bollinger Bands. These are a great tool. I'm going to share with you how they were designed and how most people apply them. Next, we're going to show you some proprietary settings, because we've altered the settings just a bit to match our needs, and that's going to make up this particular strategy, which is strategy number 3A. So we're going to show you all the rules, and you'll be able to, at the very end of this presentation, be able to apply this strategy in its most basic format. Now, one of the things I want to focus on is, since this is a classroom today, I love to take questions, but kindly wait till the very end. We have a lot of people here today, plus I have a lot of slides and examples to share with you. And so most of the time, we kind of bog down the presentation by asking questions every couple of seconds. Many times, if you wait for the next slide, your question is answered. So I'll answer just the most popular question, and that is this being recorded? Yes, this is being recorded. You can go to ProTrader Strategies and request a link to this recording, and they will send it to you, okay, if you happen to have to leave early or if you have computer technical issues. All right, so why don't we begin? And once again, hold off your questions just for the next 20 or 30 minutes. Let's start out by reviewing what Bollinger Bands are. A great tool, a great indicator. Most people don't know how to properly use them, so let's just go over the basic format of how to apply Bollinger Bands. Here's the standard definition. Bollinger Bands consist of a center line. This is basically just a moving average, and two price channels. These are the trading bands above and below it. Now, when the markets become more volatile, or in other words, there's a lot of movement, the bands widen, or they move further away from each other, further away from the middle average. And during less volatile periods, when it's rangy or there's not a lot of movement, the bands contract, or they move closer to the middle band, which is the moving average. Now, the tightening of these bands is often used by technical traders as an indication that volatility is about to increase sharply. So this is some type of indication that if you see these bands constrict and the top band going lower and the bottom band going higher, well, then most likely it's kind of like coiling, and you're most likely going to get a large price movement very soon. If we look at the standard settings here, we see that that middle line, or the middle Bollinger Band, is based off a moving average, and it's usually set at 20, or a 20-period simple moving average, okay? Now, the upper band deviation is defaulted at +2, and the lower band deviation is defaulted at -2. Now, I'm not going to go into the technical explanation of this. This is just basically the distance at which these upper and lower bands are away, are deviated from the middle moving average, okay? How far they are above and how far they are below. So if we look at just this generic chart here, these are the Bollinger Bands in black. You see three bands here, top, middle, and bottom. And as price contracts, we see that the top line is coming lower and the bottom line is coming higher. So we have a kind of contraction here, followed by some nice volatility to the upside. Excuse me. We see here now in this example, we see here that the top Bollinger Band is going lower and the bottom is coming higher. So we have contraction going on here, and then it's followed by some nice movement to the downside. All right, so this is the standard way in which the Bollinger Bands are applied. It's a great tool. It works very well, and it has many uses. But we've altered things a bit. We still use the Bollinger Bands, but we've altered things and created strategy number 3A, a great continuation strategy or trend following strategy. So here are some of the highlights of this. As I stated, it's a continuation strategy, meaning that we're looking for the trend to be established. We're waiting for some type of pause, and then we're jumping on board once the trend resumes. All right? It uses a unique Bollinger Band setting, which I'm going to give you the rules in just a second. I'm going to give you the actual settings. It's designed to trade quick, powerful trends. So we're looking for nice, powerful trends. But remember, it does not matter if that trend is in a weekly bar or if it's in a tick bar chart of the E-mini on a daily basis. It's all relative. So we're just looking for a quick, moving trend. Now, obviously, if you're trading this on an intraday basis, which it can be done very well, you'll get a lot more signals than if you're trading it on a weekly or even a monthly bar. But having said that, it will generate signals in all markets, in all time frames, and in all directions. As we state with all of our learning materials, please learn the strategy first. I know your eyes are going to light up when you see some of the examples I'm showing you that are as recent as today. But please, don't just jump in and start trading it. There's so much more to learn about the process by paper trading. So we have people that have purchased our strategies and are members of Specialist Trading who are hedge fund managers who have been trading for some 30, 40 years. We also have people that have just been trading for a couple of weeks. We suggest the same thing to each and every one of them, regardless of their experience, and that's always to paper trade. Because you really understand the process behind any strategy we teach at Specialist Trading if you paper trade for a while. Our edge here is consistency. We're not like other websites where we promise the world and thousands of dollars per year. We don't believe in that. What we're trying to instill in you is consistency so that you can be trading 20, 30, 40 years down the road. We don't just want to give you some fly-by-night method which had a couple of great hits one year and now it doesn't work anymore. We don't believe in those things. We want you to become traders so that you can sustain yourself. And the way to do that is through sound, fundamental trading education and techniques that have a two-step forward, one-step back approach. Because we know we will have small losses from time to time. It's perfectly normal. But we just want to be trading techniques that have resiliency, that are able to bounce back. Okay, so that's the highlights of this particular strategy. Once again, if you have any questions going forward, please wait till the very end because I'm going to start going over all of the rules in detail here. All right, so here are the indicators that we're going to be using. Just two. We're going to be applying a 50-period simple moving average. That's just your basic moving average. And remember, it does not really matter if we're trading a tick chart or a weekly chart. All the rules and all the applications are the same. And then we're applying the Bollinger Bands, but here's the setting change. Here's the edit we're going to make. Firstly, we're still going to use the 20-period Bollinger Band, meaning that's the moving average. That's the middle band. We're not going to change that at all. We're just changing the difference of the top and the lower band. In other words, how far they are above and how far they are below. Where before we had the default setting at +2 and -2, now we're changing the numbers down to 0.382 above, that's the upper deviation, and the lower is -0.382. I know some of you say, is that a Fibonacci number? Does that have to do, is that something mystical or magical? No, it's just that was what was taught to me when I first learned this some 30 years ago. And it seems to work well, and you'll see why. If you want to alter it by a tick or two, that's fine. But this is the standard uses we use for this particular strategy. Okay, so just go to your edit box, and if you're having trouble doing this, call your tech support. They should be able to help you edit your upper band deviation and your lower band. Remember, the upper band should be 0.382. The lower band should be -0.382. That's just the distance they are from the 20-period moving average. All right, so let's look at this. Here's what your Bollinger Bands will look like. See how they have this really nice smooth effect here? How we're not looking for this kind of jagged. We don't care if they're contracting or not. We have this really nice smooth look to them. That's what we're looking for. This is the way your Bollinger Bands should look. They should have this nice smooth approach. All right, so here are the rules now. And please remember, if you don't get a chance to write them down, don't worry. You can request a recording of this from Pro Trader Strategies. They will send it to you so you can watch this as many times as you want. So don't worry if you happen not to write everything down. All right, step number 1. Entry price must be above the 50-period moving average. When we mean entry price, we would love to see all of the bars above the 50, but all that is required is that our entry be above the 50-period moving average. So as you can see here in this example we showed in the E-mini, this is a 5-minute chart. Price, for all intents and purposes, is above the 50-period moving average. Okay, step number 2. We're going to look to buy when 5 consecutive price bars close either on or above, it would be preferably better if it's above, the highest Bollinger Band. And they create a pivot high. This short-term high will be labeled the setup. Now, for those of you who aren't familiar with what a short-term high or a pivot high looks, it's something like this. So this is what we're looking for. We're looking for 5 bars just like this, regardless if they're 5-minute bars or weekly bars, but 5 bars closing above the 50-period moving average. And then we want to see something created that looks like this, that creates a short-term top, where you have a high followed by a higher high, then a lower high. Now, obviously, if we're going short, this will just be reversed, and it'll look something like a V, okay? Now, don't worry if that's a little bit confusing. Let's look at the example here. This is what we're looking for. We have a total of 1, 2, 3, 4, 5 bars that close above the 50 period, and we've created this little V approach here, this little short-term top, okay? All right, step number 3, we're going to enter to buy when price trades 1 tick above the short-term high. Now, if price bar closes below the highest Bollinger Band before entry, we're going to negate the trade because we want to see price stay above the top Bollinger Band. See, if we form that little short-term top and then price retraces and sells off before we enter and closes below that highest Bollinger Band, most likely we've lost momentum. Because remember, this is a continuation trade. We're trying to catch a trend. If we go all the way back below that Bollinger Band, most likely the trend has dissipated, so we look for another setup. So what we're looking for is, here's our setup right here, and we want to see that we trade above there. So we traded right above, and that's our entry point. Now remember, had we not traded above there, and had we gone down here first and closed below here, well then the trade setup is negated. But since we stayed above the highest Bollinger Band, this is a valid entry. All right, step number 4. We are going to place our protective stop just below the lowest short-term low that was prior to our entry. Okay, so we told you what a short-term top was. It kind of created this kind of like arrowhead. Well, a short-term low is just the opposite. It kind of creates this short-term little V approach. So as we see here, we had a low followed by a lower low, double low here, and then a higher low. So this is our last stop here, okay? Or our first stop, I should say, the last short-term low. So we entered here, we place our stop here. All right, so now where do we exit? Hopefully with a profit. We are going to exit on a range extension of 200 and or 300%. Now this is where people get confused. They haven't heard of this technique before, and it's extremely simple. All you want to do is measure the range of where you started to go up to where you created that short-term high that we based our entry off of. So if we look here, here's where the short-term high was. Remember, we created this type of V. All right, so that's the top of the move. And here's where the rally started. We kind of were going sideways, and then we started to go up. So this is the range extension. This is 100%. So you measure that, and obviously 200% means you just take that and you add that on top. And this gives you 200%, and this is where you'd exit, right here. Okay? You roughly would have entered on this at 1768. You would have exited roughly around 1774 for a quick 6-point move. Now, if you wanted to, if you thought there was more room left to the upside, you simply take the same amount and now add it to 200, and that gives you 300. So now we've got an 11-point gain in just a couple of hours trading this simple method. Okay? That's how basic it is. We're looking to catch momentum based off of our proprietary use of the Bollinger Bands, because that helped us to discern if we're in a nice upward trend. Let's look at some more Strategy 3 examples, and trust me, if it seems a little wordy or complicated, you'll get the gist of it after we go through all these examples. So I'm going to show you a number of examples right now. Let's start out for stocks for all you stock traders, okay? Let's look at RAI. All right, looking right here, this was at the beginning of the year. Now, we want to first count that we have 5 closes above the 50-period moving average. Okay, this is the 50-period moving average. So obviously we have 1, 2, 3, 4, 5. All right, 5 closes. After we've located that, then we look for that short-term top, that little arrowhead. And there it is right there. So this is a perfect setup to go long. Now we need to see, though, that price trades just above that little short-term top. And it must trade there. It doesn't have to close there. It just needs to trade there before it closes below this top Bollinger Band. So in other words, we have to intraday trade up here to tell us we can go long. And as we see on the very next bar, it did. So that's our entry point in RAI, and we entered roughly at 66.71. Now here was the last short-term low right here before our entry, roughly about 63, so we place our stop right there. Okay? Now we need to measure the range of where the rally started to where that short-term top was. So here it is. That's the 100% right here. And whatever that amount of points is, you simply add that, and that gives you the 200% exit. So you could have exited right there roughly at 70 and or 70 and made a good 4 points. Or if you felt there was more room left, you could have gone for the 300% range extension, and that would have given you nearly 8 points. See how simple this is? We don't rely on an outside source to tell us what to do. We don't wait for the news event to come out. We don't wait for earnings. We don't wait to see what the economic indicators are going to be. We don't rely on a ton of indicators that must cross perfectly in line. Or we don't wait and see what somebody says on TV or in some chat room. We learn to listen to the most important thing, which is the chart in front of us. And that's it. Keep your trading simple, and you will get on that road to consistency that I know you're searching for. All right, let's look at as you see here, if you're trading this, you should be thinking about very strongly getting out either a 300 or 400% at the most, because many times the trend will change, as you see here. All right, let's go on to the next example, UPS. All right, now, because of the way this chart was sized, you can't see the 50-period moving average, but trust me when I tell you that price is below the 50-period moving average. So if we're below, we're looking to go short using this technique. Now we need to have 5 closes below the 50-period moving average, as you see here, okay? And then we need to see that short-term low, which is right here, okay? So we have a valid setup to go short. Now, we need to trade just below here before we rally back up and close above this low Bollinger Band. So we need to, it doesn't have to be on the next bar, but as soon as possible, we need to trade below this. And as you can see, it was on the next bar. Remember, we do not need to close below there. So many students have difficulty. They figure, well, we didn't close there, so I didn't go short. We're not waiting for the close. It just has to be intra-bar. So you would have shorted at 94.46. Here was the last short-term high, the short-term top, so that's your stop, roughly about 101.5. You measure the range from where the sell-off started to where that short-term low was. That's 100%. And now you just subtract that, and that gives you the 200% exit. So you would simply just place a limit order here to cover your short. And look what happened. Just a few weeks later, you made nearly 3 points in a few weeks. Okay? And as you can see, there's the 50 period. We were below the 50 period this entire time. Now, a lot of our students say, Steve, I like to trade expensive stock to trade options. Can we apply options to this? Well, you sure can. Let's look at this older example in BIIB here. Okay, this is in February. And if we look here, we're above the 50-period moving average. Now, we have 5 closes. We closed below that Bollinger Band. Then we have 5 closes above. And then we've located a short-term top here. So we can go long at 407.95. We measure the distance to where the rally started, and there's our 200%. So there's 62 points in basically a month. Now we realize that not everyone can purchase a $400 stock, but had you gone out and got the calls, out of the money calls, you could have made 60 points in roughly a month or so, and I think you could have done very well purchasing some cheap, inexpensive calls that were out of the money. This is what a number of our students do that love to trade options. They simply, instead of buy the stock, they purchase the calls or the puts. Here's another example. You could have purchased puts in WIN. Now, initially, price is above the 50-period moving average. All right, but then we have 1, 2, 3, 4, 5 closes below the 50, and we have this little short-term low created here. So this is a perfect environment to go short if we traded below, which we did. You could have entered at 140.95. Here's the range extension for where the sell-off began. Now all you do is measure that range and then subtract it, and you could have exited for a quick 19 points to the downside in just about 3 weeks. All right. Once again, you could have purchased puts, gone out of the money, say bought the 120 puts or something like that. Now this also works on commodities. Here's an older chart of heating oil coming in from last year into this year. Obviously, heating oil was below the 50-period moving average. So this means we're only looking to go short. Now if we look here, we have 5 closes below, and we have a short-term V right here. So this is our entry point to get in. And you could have entered right here, measured the range extension, and if you really feel strongly about a move, regardless of what type of market it's in, we would suggest using even 400%, but no more than 400. Usually we only suggest 200 and 300, but if you really feel strongly, such as there was a move in heating oil, we would say definitely be out of your position, whether it's long or short, at the 400% range extension, because the trend usually changes. And as you can see here, in February, just a few months ago, it did change. We started to flirt with the 50-period moving average to the upside. As you can see here, we had that nice little V, and you could have used this to go long to the upside. Now, we can also apply this to ETFs. Here's QQQ. We have 5 closes above, and as you can see, we created this little short-term top right here. So this was just in February once again. We could have entered at 104.18, placed our stop just down here, below the last short-term low. Here's where the rally started, so here's the 100% range extension. And all we have to do is simply double that. And that takes us to our exit, which would be roughly 4.5 points higher in just about a week or two. Okay, do you see? We've just showed you how this can apply to trading stocks. We also showed you how it can apply to trading commodities. And we also showed you how this could apply trading ETFs. It's a QQQs. Now we realize not everyone trades the QQQs. You could have used this as a market trend identifier. So if we had some type of a buy signal in the QQQs, well, it could have given you the confidence to buy a stock in the NASDAQ or something of that nature. Okay, so let's move on now to a different market, different time frames. Let's look at the E-mini, because as I stated at the beginning of this presentation, this technique will work in any market, any direction, and any time frame. All we need is a nice trend that's established, and that's where the Bollinger Band setting helps us to discern if we have a nice trend. All right, so let's look at the E-mini now. Let's look at a 30-minute chart. Okay, this is the 30-minute chart of the E-mini last month. We're below the 50-period moving average. We have a total of 5 closes, as we see here below. But we haven't created a short-term low yet until right here. So here's our short-term low. So this is our point of entry. Our stop would be back here, and all you'd have to do is measure the range once again. Now we realize once again that a lot of people don't like to hold the E-mini overnight. So in 2 days you could have just purchased puts if you wanted to and made nearly 30 points. That's roughly about $1,400 per contract, nearly $1,400 per contract, or depending on if you had options out of the money, you could have taken advantage of that as well in just a couple of days. Here's a 5-minute chart of the E-mini. As you can see here, this was just last week on the 15th. As you see here, we're going into the day of the 16th, 4/16. So we count 5 closes above. We have the short-term top that's created right here. Our entry was at 2100.75. Here's where our stop was, and this is also where we measure the move. This is 100%. So we just double it, and in roughly about 20-25 minutes, we made 3 points. We didn't care what the news was. We don't care why the market's going up. Who cares? I mean, really, who cares? I remember as a specialist on the floor, my mentors used to say, Steve, if you're investing, if you're holding on to something for your long-term position or IRA, you need to know what's going on with the company or what's going on economically in the world. But if you're holding something for a couple of minutes or even a couple of days or a couple of weeks, who cares about the news? Everything you need to know is in the chart in front of you. So that's the only thing you should be concerned about. Don't overcomplicate your trading. Trading is really simple. It's just us, the traders, who overcomplicate things. Here's a 60-minute chart of the E-mini as well. This was just last week, I believe, as well. We are below the 50-period moving average. We have 1, 2, 3, 4, 5 closes. And we have the short-term V right here. So we know that this is going to be our entry if we trade below it, which we did. Could have entered on this hourly chart at 2082. We measure the move from the top. We're going to sideways, then we started to go down from this point. So we measure the 100%, and then we just simply subtract it. And in just roughly about a day or so, or actually about 3 or 4 hours, we made over 17 points in the E-mini. Now this happened this morning because I know I've been showing you charts that happened at the end of last year, the beginning of this year, just to show you that this will happen as early as today. Here's a tick chart, a 2000 tick chart of today's action in the E-mini. Okay, this was roughly at 7:30 Pacific time on the West Coast. We're on the West Coast. We have 5 closes above the highest Bollinger Band, and then we created this short-term top right here. Okay. Now there was a short-term top right here, but we hadn't had the total of 5 closes yet. But here's the short-term top. So we entered at 2090.75. We placed our stop just right here. And the move actually started back here. This is where we started to go up. So we measure that 100%, and we simply doubled it. You exit at 20.95 So roughly in just about, I would say about 10 or 15 minutes, you made 4.5 points. Once again, this was today, this morning. From roughly 7:30 to about 7:50 in the morning, Pacific time. Now let's look at the Forex markets. We know we have some currency pair traders here. Let's see how this can apply to the Forex currency pairs. Let's start out by showing you a weekly time frame. We haven't covered weekly yet, but we now start out with the euro dollar going all the way back past year, because this is a weekly chart, okay? We see here that we have 5 closes below the lowest Bollinger Band, and we have a short-term V created here, the short-term low. So this is our point of entry. We could have entered actually last year at 35.01. Now this was well before the euro dollar, for all you currency pair traders, has fallen out of bed. All right. For those of you who don't follow, the euro dollar has been really going straight down for the latter part of the last year into this year, and it's still struggling, trying to form some type of a bottom. So we didn't know that this was going to happen. The market told us. Why? Because we were below that Bollinger Band setting, and we had closed below and made some type of a short-term low below the 50-period moving average. So that was our point of entry. We simply measure the range extension, and if you really felt this was going to be a big move, you could have used that 400% all the way, and look what happened. Okay, the market went all the way down. If you had applied this in just 2 or 3 months, you would have made nearly $14,000 or $15,000 just trading one contract, just off of this simple technique. Now this is a weekly chart. So we've shown you daily charts, we've shown you tick charts, we've shown you weekly charts. Let's go back to a 15-minute chart now. Now this was just this last week, the 15th and the 16th of April. Last week, as we see here, we're above the 50-period moving average. We have 5 closes above the highest Bollinger Band, and here we create a short-term top. We did the same thing right here. So we had 2 setups, on one on the 15th and one on the 16th, and this first one made 57 pips. The second one made 46 pips. Okay, so we had roughly in just one day we made over 100 pips or about $1,000 per contract, just trading this simple technique. Remember, we don't tell you what to look at and what not to look at, but there are no requirements to follow any news or any type of economic indicators in our courses. It's not required at all. We try to keep things as simple as possible. So before we go to any questions, let's recap what we shared with you today, okay? Because we shared a lot of stuff with you actually today. Strategy number 3A, highlights. This is a continuation strategy. You saw how we are continuing a trend. We're not trying to pick a bottom. We're not trying to pick a pullback. We're trying to just see that a trend has been established by that countdown, and then by looking for some short-term top, and then waiting to see that that top has been exceeded, or waiting to see that that short-term bottom has been exceeded. Okay, so then we just continue with the direction of the trend. We just double the range from where the trend started, and then add it to show our exit point, or subtract it to show our exit if we're short. It's based off of that unique Bollinger Band setting. Remember, if you're having trouble with it, just contact your tech support. They should help you be able to set it up really easily. All it is instead of the standard default of the higher and lower bands set at +2 and -2, we change it to read the higher band at 0.382, the lower band at -0.382. That's just the distance it is from the middle 20-period moving average. And you see how once we apply that, how it really smoothed out the Bollinger Bands. It's designed to trade quick, powerful trends. Now, when we say quick, it's all relative. You can be trading this on a weekly time frame the way I showed you in the euro dollar, or you can trade it on a tick chart. But either way, it's designed to catch those quick, powerful trends. Obviously, if you're going to trade this intraday on tick or minute charts, you're going to get a lot more signals. So it's up to you. But please, you now have the rules to this strategy in its most basic form. Learn it first by paper trading. Do not jump out and start trading this tomorrow morning. Paper trade it first, sure, until you really fully understand it, and then see how well it works for you. See if you can follow it. Because some of these, if you intraday trade it, you have to be quick. But if you go out to maybe a 30-minute chart or an hourly chart, it's not as intense. Our edge here is consistency, as I stated at the beginning of this presentation. We're not looking to catch home runs. Every once in a while, we will get a home run. I showed you that one where we made over 60 points, but that's not our goal. Our goal is just to come back and trade another day. How many of you have been promised the world through trading systems or strategies that you purchased, and they've almost wiped you out? We don't want to be trading that way. Our goal is to be able to trade the next day so that you can be trading 10, 20, 30 years down the road. That's our edge at specialist trading. So before we go to questions and answers, I want to ask yourself one question. Ask yourself honestly, Do you think that any of the edges that I revealed today and presented today could have helped your trading this past year? What if you would have been able to use the unique Bollinger Band this past year, all right? Or what if you just would have applied the 50-period simple moving average and known that if you're above the 50 period, you should only be looking to buy, and if you're below the 50 period, you should only be looking to sell, okay? Well, we've just given you the full rules, the basic format, the strategy number 3A. Here's what we want to offer you today as our attendees to this webinar. We are offering you a 2-for-1 trading strategy combo. This is our strategy number 3 Trend Trader course, and it basically is 2 trading strategies for the price of 1. So we're going to give you strategy 3A, but a more advanced, enhanced version so that you learn how to, use different exit points, use different money management points, and how to trade it just a little bit more fine-tuned. But we're also going to throw in a strategy that uses the Bollinger Bands that, in my opinion, is an even better strategy than the one I shared with you today. And that's strategy number 3. In fact, let me share with you some of the most recent signals that were in strategy number 3. Strategy number 3 is different from strategy 3A in that it's a pullback strategy. So with this particular strategy, we're actually looking to buy on those lows as opposed to looking for continuation. As you see here in BBBY, as we pulled back, we got a buy signal using strategy 3 right here at the lows before it started to go higher. Now this works also if you want to go short. In Tesla, we had a really nice run up here a few months ago. And guess what? Where most people thought Tesla was bottoming and going higher, strategy number 3 generated a sell signal. And look what happened. It's almost uncanny how it projected the sell signal right at the very top of the pullback, because strategy number 3 is a pullback scenario type of strategy. It also works on the E-mini. As you can see here, we had a small pullback coming down to these lows. Strategy number 3 generated a buy. And look at the points that were generated on this 2,000 tick bar chart for the remainder of the day. Here's a 60-minute chart using the same rules, the same parameters, and as you can see, when we had this nice bounce up, it was just a pullback in a downtrend. Strategy number 3 generated a sell signal, and look what happens to the downside. So this is where it differentiates from 3A, the one I shared with you, because you'll be getting a lot more inexpensive prices. If we look at the Canadian dollar here, last December, a lot of people were thinking that the Canadian dollar was going much lower. Well, guess what? Strategy 3 generated a buy signal right at the beginning of December, and it has continued to go higher and higher and higher. So this is why I say, in my opinion, it's a better strategy actually than the one I shared with you today, and we're giving you both of them for the price of 1. So this is a 2-for-1 deal for all of our attendees today. You get instant online access. It's an online course, detailed instructions. Remember, it says stock strategy right here, but it applies to stocks, futures, forex markets, ETFs, commodities as well. Anything where you have a nice trend and then a pullback within the trend. I go over all the entries, all the exits, all the stops, remember, of both courses. So even though I kind of went over strategy number 3A rules very quickly, you have the entire online instruction where I take my time showing you much more examples on how to implement strategy 3 as well as strategy number 3A. You also get 1 year of trade signal alerts, a year of weekly trading lessons, and this includes new add-ons as well. Now, this is usually sold for close to $1,300, but for both of these together, we're dropping the price for all the attendees today down $300, down to $995, and we're offering payment plans available as well. So if you can't come up with $995, contact the people at Pro Trader Strategies, and they can set up a small deposit, whether you can be up and running in just a matter of moments, and you can have both of these strategies at your fingertips. Remember, these are real-world examples that we just shared with you. We already have people that have paid close to $1,300 for this. You can get this for $995. Here's how to contact all the information. As you see here, contact my sister site, which is Pro Trader Strategies. I've teamed up with them. They do all my marketing and promotion for all of my courses. You can email any one of their trading consultants at trading@protraderstrategies.com, or you can call them directly at area code 310-598-6677, and you can request that payment plan if you'd like with them over the phone. And as you see on the very bottom, there is the link that can take you automatically to the sign-up page so that you can be up and running in moments with both strategy courses. Now you have to copy and paste that onto your browser, but if you look on your chat box on the far right, I believe there's a live link there where you can just click that on and it will automatically take you to that page. All right, we have about 10 minutes left. Let me open up the question and answer box, and thank you so much for waiting. If you happen to have any questions, I thank you for holding off. Let me just go back and see if I can start off at the beginning. Most of the questions are, is this being recorded? Yes, it is. Okay. Michael asks, what happens if there is no pivot in the first 5 bars? Do we wait for the next pivot no matter how many bars that takes? Yes, Michael, very good question, and the answer is yes. You answered the question yourself. That's very good. What happens is many times you will see the pivot within those first 5 bars or maybe a couple of bars afterwards, and I showed you a lot of examples of that scenario. But oftentimes you'll see 5 bars close either above or below, but then a pivot will not be formed for a lot longer. Many times when this happens, this will increase your risk because you will also have your stop still at a much lower level. So it's up to you to decide if you want to take those trades. I personally don't like to take them because they're too much risk. I like to see where it's more tight, and because I know it's going to be a nice sustained move, I'd like to see a smaller risk so that I can have nice, if you're looking for a risk-reward ratio, a smaller risk would be more like a 2-to-1 risk-reward ratio, okay? So I personally would not take those. I wouldn't suggest taking those ones where you have to wait for 5, 10 bars for a pivot height or a pivot low to occur because you're increasing your risk, okay? Jacob says, damn, he was in BIIB and sold before the gap. Well, sure, it's too bad because I think if you had used this technique, you would have still been in. Kenny says, does this work only on daily charts, and what are your settings on the Bollinger Bands? Well, no, Kenny, as we showed you, it works on virtually any market, any time frame. I showed you weekly of the currency pairs. I also showed you tick charts of the E-mini, so it doesn't really matter. Remember, the settings are you want the upper and lower deviation to be 0.382. All right, now you're free to play with that and alter it. It's not set in stone. Remember, we do not teach nor do we trade systems where everything has to be the exact same. We teach strategies which give you about 20% leeway. So if you want to experiment with it, feel free to. In fact, we encourage that. But just stick with the basic format and you'll achieve that level of consistency. Okay? Let's see, the 5 close. Is that above the bands or above the 50-period moving average? Kenny, the 5 close is above the bands. If it's above both, that would be better. But the basic rule is above the Bollinger Band if you're going long, okay? Let's see. Jacob asked, does it work in Forex? Yes, I showed you a bunch of good examples where it did. Let's see. Does it matter if price comes back within the Bollinger Band after the short-term top? Yes, it does, DT. See, what we want to see is a continuation of the trend. So we've broken out, let's say, to the upside. We've created that short-term top, but we haven't entered yet because price has not exceeded that short-term top. So we want to see price kind of hover around there, all right, before it breaks out. But we don't want to see price come all the way back down and close below that high Bollinger Band. If it does, most likely the trend has ended, it's over, or it's lost a lot of its momentum. So then we conclude the setup. We're not going to take it anymore. We have to do another countdown, okay? KL asks, did I violate the principles of closing price must be above the 50-period moving average? I saw a few setups shown that they were below the 50. Well, remember, KL, it's optimal to have both prices close above the 50 and the Bollinger Band, but all that is required is to be closing above the Bollinger Bands, okay? That's all that really is required. It would be better if it closed above both, but all that is required is that you have 5 closes above the highest Bollinger Band or 5 closes below the lowest Bollinger Band in order to create that setup, okay? Singh asks, do you make trade break even at any point? Yes, we do. That's in the course. Don't want to, that's more of a refined way of trading, and we teach that in the course. But it's up to you. And we also teach you how to scale, how to follow the trade while you're in it. So there's different ways to trade it, but that's part of the course. You have the basic standard format. If you've been trading for some while, you'll be able to know when you want to move your stop to unchanged. Mostly if you cover your risk, you can move your stop to unchanged, but we teach you a specifically different way in the course. Let's see here. Does it matter if price comes back? Oh, I just answered that one. Okay. Vinay, you're the only mentor one needs. You are amazing. Thank you, Vinay. Appreciate it. Vinay, student of ours. Thank you very much. Remember, we're just trying to pass on things that have stood the test of time, okay? These are strategies that I was introduced to some 30 years ago that have still held up. Most of the things that you've learned that are some fly-by-night schemes, you know, they do well in certain conditions, and then when the market changes conditions, they don't work anymore. That's not what we teach. We teach things that have sound, fundamental consistency to them, and we're not going to promise you that they work all the time. We know that things don't work all the time, but they have resiliency in order to bounce back. So that's what we believe in, consistency. Okay? Judy asks, why is it called 3A and strategy? Are there two other strategies? Well, Judy, the other strategy in the promotion we have is strategy 3. That is also based off of that Bollinger Band setting. So these are the two strategies we have based off of the Bollinger Band setting, that unique setting, which I shared with you. Strategy 3 is, in my opinion, a much better strategy because it kind of picks the bottoms in an uptrend. Now, strategy 3A still uses the Bollinger Bands for a completely different approach where we're just a continuation of the trend, okay? So that's the only reason why we call them 3 and 3A. Dennis asks, what software does this package work on? Well, it's not a proprietary software. It's just where, if you have Bollinger Bands and you can change the settings, it works on virtually any software. You just you have to be able to adjust your own settings. But if you're asking about the add-ons where they give the buy and sell arrows, they can work on MT4, TradeStation, Metastock, Sierra Charts, NinjaTrader, and Thinkorswim. But you have to do a slight edit with that to use NinjaTrader with Thinkorswim. Okay? Let's see. Ramesh is saying price should form a 5-bar close above the high Bollinger Band, apart from mean close above the 50-period simple moving average, and there must be a 5-bar topping format, right? Yes, it's a little bit complicated, Ramesh, but just remember, you want to have, firstly, at least 5 bars close above the highest Bollinger Band. After you do that, you look for a short-term top. Now, that top can be within the 5 bars, or it can come afterwards. Once you have found that short-term top, you wait for it to be exceeded intra-bar by 1 or 2 ticks. All right? That's your entry. And that's it. Don't overcomplicate it. Steve asks, what did I say negated the trade? Well, if we haven't entered yet, but we have a perfect setup, and if price sells off, or we're looking to go long, and price sells off and closes below that highest Bollinger Band, the trade is negated. It just means that we've lost momentum. Okay? Dave says, brilliant, thank you for this webinar today. You're more than welcome, Dave. And remember, this is a great strategy. I use this, but please, please, I know a lot of your eyes are lighting up. Even if it will produce a winning trade, you may lose money because you haven't studied it enough. You may enter at the wrong place. You may not use the correct settings. You may have gone through it too quickly, and you may have used a faulty setup to enter. So please, paper trade first, okay? It really is important. Will this work with Renko charts? You know, Tim, I don't use Renko charts, but I don't see why not. You have all of the variables now. Feel free to experiment with it. It's your strategy now. You have all the rules, so feel free to experiment with it. Let's see here. Michael asks, how to handle trailing stops as it progresses. Well, once again, Michael, that's in the course. We teach you different ways of how to stay with the trade. He also asks, is there any back testing on various markets for success rates of this strategy? No, Michael, because as I stated in the opening, we don't trade systems. The only thing you can back test are systems. That means something is traded the same way each and every time. But everyone trades this differently. Someone will get out at 200%, someone will get out 300%. What do you back test? Only stocks? Do you back test tick charts? Do you back test weekly charts, minute charts? We're an educational company. We're not a backtesting firm. So if you want to backtest it, feel free to, but there are 1,000,001 variables of how to trade it. Everyone trades it differently. Steve asks, where is the stop placed? If you're going long, the stop is placed just below the last short-term low that was created prior to entry. If you're going short, the stop is placed just above the last short-term high that was created just prior to entry. Okay, these are just pivot lows and pivot highs. Very standard stop placement. Let's see. Howard says, is it okay to take part of profits at 100% and let the rest of your trade to try to get out at 200%? Sure. See, this is what we're saying, Howard. That's perfectly admissible. This is why everyone trades it differently, why there are no back tests of systematic nature, because everyone can trade it. Someone can say, such as Howard here, I want to exit part of my positions at the first percentage level and then the remainder at the next. That's fine. There's nothing wrong with that. Some people go for all 300. They say, I'm going to get out at 300% and just move my stop up. Others will say, no, I'm getting out at the first percentage level. That's perfectly admissible. That's up to you. Greg says, just want to say thanks. That 50-period simple moving average and pullback strategy works great with the 5-minute binaries in Nadex. Oh, you're more than welcome, Greg. Thank you so much for your participation and being a member of Specialist Trading. Okay? Just time for a few more questions. Remember, if you want to take advantage of this great 2-for-1 attendee special, here's the information in front of you. Contact the good people at Pro Trader Strategies. They market and promote all of my courses. They can get you that discount, that $300 discount, as well as a payment plan. So if you don't want to come up with the full $9,985, you can put a small deposit and you can be up and running in just a matter of moments. But remember, this is only going to last for a couple of days, so you want to do this very quickly. Let's see. Is it okay to take part of profits? Oops, I just answered that. I'm sorry. Some of these, I'm sorry. I'm kind of losing my place here. Dave says, so it'll work on hourly bars? Yes, it will. It'll work on hourly bars because I think I showed you a couple of the E-mini where it worked on hourly bars. If the trade is negated, if price comes back with the Bollinger Band, why was the 15-minute currency trade triggered? You know, I'm sorry, DT, I'll have to backtrack that. You have this recording. You can go back and look. If it was triggered, remember, we want to see that price doesn't close below that top Bollinger Band. If it was a typo, or if it was done in error, then just assume that you wouldn't have taken that trade. Trust me, if we're looking at 15-minute charts, there's setups happening all the time. So let's say you didn't take that one. Say that one should not have been taken. Great. Just take the next one. There's going to be another one in a different market in a different direction, okay? These are all great questions, and it looks like you all have pretty much understood the strategy, but as I stated, please paper trade first. Do not go in feet first and think that you've got it under your belt. Trust me, even now when I am trading and trying to see a new technique, if it works well, I will paper trade for weeks, sometimes months. So there's nothing wrong with paper trading. There's nothing that will hurt you from paper trading. Once you really fully feel comfortable with it, then start trading with small amounts, okay? In closing, I want to thank you for attending today. As you see, this is a great strategy. This is a great technique. I use this for capturing some quick trends. I use it mostly for intraday. And remember, if you want to capture these quick trends intraday, the best ones are in the morning and in the close, because that's where you get a lot of movement. So you can wait just for the end of the day to use this, and you'll many times see some good setups, okay? So this can be just part of your arsenal in your trading bag. But if you really want to get, which I feel is a better strategy, please take advantage of that deep discounted offer. You're going to get 2 of these for the price of 1, and we're even discounting that down $300. But this is only for a couple of days, and we're going to also offer payment plans. So please take advantage of it. And in closing, I want to thank you for attending today. Thank you for coming to the presentation, and I look forward to all of you becoming students of mine at Specialist Trading. Thank you so much. I'll see you next time. Bye-bye.